Hello and welcome to Smaulgld's. In case you missed it, top gold and silver stories for the week ended August 13th, 2016. Schmita delayed again. We haven't had that COMEX default. The stock market hasn't crashed. Gold isn't at $2,000. What's going on? Well, lots going on. What caught my eye just before I started doing today's week in review was this right here. Bank of Japan set to become top owner of 55 firms in the Nikkei 225. The BOJ is already a top 5 owner of 81 companies. So this means that the Bank of Japan is the market. When they own more shares than anyone else of a good portion of the companies in the Nikkei, with the ability to buy even more and basically to be the top company, the top owner of all 225 companies, they can also print more yen and start buying up, like the Swiss National Bank has done, US equities. There seems to be no end to the amount of manipulation and total domination of these markets by central banks. That's just the Bank of Japan. The Fed has an enormous ability to print money. They printed $4.5 trillion. Didn't do much good, but doesn't mean that they can't do more. And since no one really blinked an eye, there are people complaining about it, but that's all in the alternative media. These things are now normal. Central banks buying equities, printing money, buying bonds, government bonds, monetizing debt, or even buying, now they're buying corporate bonds at the European Central Bank. So my point in all of this is, just to get started, is that for everyone calling for imminent collapses, the reason they're not happening, and the market will eventually take over, not if the market is the central banks, and the central banks have the ability to print money at will and dominate the markets. And we'll see as we get into later in the day how gold and silver reacted to the consumer spending numbers and the low PPI numbers. They got smacked right back down. It seems that they have an inexorable grip on the markets that, while people think eventually they'll lose control and been predicting they're going to lose control, they seem to be tightening the grip. That's just my opinion. I don't think it can last forever, but I don't see anything where it's imminent, because unlike the last collapse, it seems that the central banks were caught by surprise and then they had to take remedial action. It seems now they're taking proactive actions to make sure not only doesn't the market collapse, that it stays elevated. Okay, let's get to what happened during the week. Gold and silver closed essentially flat at 13.35 an ounce, although the price was up and down during the week. It ended flat. Same with silver, ended at 19.66. Gold and silver ratio, the gold and silver ratio is at 68.05. As you can see, I gave you a year chart here. It's gone down since it hit its high at 83 something in February, March, but silver has rallied more than gold, so the gold silver ratio has headed back down. Charts of the week. Gold and platinum. Had a quick interaction on Twitter with Silver Farm, who made a good point about the gold platinum ratio. He claims that there is no such thing as a natural price ratio based on the gold silver amounts in the ground, meaning that because gold is only 16 times more plentiful than silver, therefore some commentators say that silver should be priced only 6 times less than gold, and in fact it's not. It's 60 times or more less than gold. The point I like to make about platinum is 10 times rarer than gold, and it's not even more expensive than gold. At the moment, as you can see, it's cheaper than gold, and gold trades at a premium of about 1.181 to 1 ounce of gold, which means that rarity is not the only determinant in valuing something. I like to point out that my artwork is far more rare than Picasso's work, but my artwork is worth absolutely nothing. So just something to keep in mind when you hear that the gold silver ratio must eventually return to its natural in the ground ratio. That's not true. If gold is needed or wanted or desired more for jewelry, if it's wanted, needed, and desired more as a hedge against inflation or as a monetary asset, then gold to silver ratio does not have to return to its natural in the ground ratio. It could even turn out, as some analysts claim, that silver may be rarer than gold. So what? If it's not desired at the same level as gold, it doesn't mean that silver is going to return to any ratio. It just means that happens to be one of the factors in determining the price of gold and silver. Here's another point I want to make again. Since February, the Dow has outperformed gold. Look at that. Gold's had a great year, but the Dow number slightly ahead of the gold number. And that's solely because of negative interest rates, artificial interest rates, money pouring into the US stock market, solely because there's not much else to do. That's the only game in town, and who knows, other than the Swiss National Bank, how much foreign money is being poured into through other central banks into the US stock market. We don't know. I could be, but the point being is that there's no rational reason for the Dow to be at all-time highs. Also, the Nasdaq is at all-time highs. We thought that was supposed to be a triple top. It's not. Nasdaq's at an all-time high. S&P's at an all-time high. Dow Jones at an all-time high. And gold is not. Gold is having a good year, but it's $500 off its all-time high. And one of the reasons is that the gold demand, as you can see here in the gold ETF, it's all paper. The dramatic increase in gold demand this year has been for ETFs and COMEX contracts, while we've mentioned before, the physical demand on the Asian side is down significantly this year in China, in India, even in central bank purchasing in Russia, and of course in Perth Mint and United States Mint sales. As you can see here, the lowest month. I have records going back only 5 years, and the July gold sales at the Perth Mint were the lowest in 5 years. Now, you would think if the price is rising that people would be chasing the price higher. It's not the case when you have the price rising. It is the case for people who trade paper assets where the price rises. But the physical buyer is smarter. The physical buyer holds his fire before he goes and buys more gold. We mentioned also the Swiss National Bank. We did a story on it this week, and we followed up twice, once after the original article, that the Swiss National Bank has a $63 million equity portfolio. That wasn't the news. The news was that 1.5% of their portfolio, or over $1 billion, is in gold and silver mining shares. So again, the central banks purchasing all these top names here and in effect manipulating the market and driving even the gold and silver mining shares higher. Earlier in the week, we got the People's Bank of China gold numbers. Again, they were lower this month. Only 5 tons were added to the People's Bank of China's gold reserves. Now, again, I have to mention this. Whatever the People's Bank of China puts on its balance sheet is not all of China's gold. It's all of the People's Bank of China's gold. Because China is a communist nation, basically they own everything that's in the country. So they also own what's in their investment companies, what's on the balance sheet of other banks that are not the People's Bank of China, partially owned banks, investment funds, individuals. So there's plenty more gold in China. However, as a matter of central bank policy, the People's Bank of China has curbed its gold purchases this year, and evidenced by private demand on the Shanghai Gold Exchange. I don't have the chart here, but I think you can go to the website, thesmaulgld.com, and see it. Shanghai Gold Exchange withdrawals and deliveries are about 25% lower than last year, and I can only imagine that's a result of the higher price. Okay, other gold and silver news. Again, gold and silver ETFs topped the charts. There was an article in Wall Street Journal. That's the key here. ETF demand is higher, not physical buying. Chinese imports and exports down in July. That's the general economy of China. The amount of exports that they're sending out is lower. The amount of imports they're taking in is also lower. So it shows a slowdown in the Chinese economy. I found it humorous that Reuters somehow tied Brexit into this, pointing to further weakness in global demand in the aftermath of Britain's decision to leave the European Union. That has absolutely nothing to do with China, but that's Reuters for you, and we'll see a few more examples of Reuters ridiculousness as we look at the other headlines. Fed chatter. Again, I don't know why people listen to them. Remember, at this point, 2 years ago, they said they would have 8 rate hikes in the can, or by the end of this year. They did 1 in December. They'll probably do 1 this year, but so what? That's not a gradual tightening of interest rates. That's throwing a bone here and there and just trying to retain some shred of credibility by raising the Fed funds rate 0.25%. It's no big deal. And of course, he says, with inflation below its target, I think we could be patient. This is Fed Powell. But then, of course, Reuters says he spoke on Thursday before strong payroll numbers were released. As we can see, those strong payroll numbers are probably the only number in the entire raft of economic data that's even could be considered strong. And then you can also question whether those numbers are accurate or not. Um, Donald Trump gave a speech. It was interesting. What I took away from it was he made some good points. He said the 5% unemployment number is one of the biggest political hoaxes. And he seemed to be promoting industrialization over financialization. Though he didn't use those words, he was talking about building infrastructure. It wasn't. He seemed to be talking about building real things, and he did mention Americanism over globalism. U.S. Mint sales update just highlights the limited amount of gold and silver that the U.S. Mint is selling. At the beginning of the week, they announced that they had sold 150,000 American Silver Eagles and only 10,000 American Gold Eagles. And the numbers weren't that good again. I mean, they're up about, let's see where they are. By the end of halfway through the month of August, we are at only 325 American Silver Eagles sold and 26,500 American Gold Eagles, which means, unless there's some dramatic increase, there will not be even 750,000 American Silver Eagles sold in the month of August, which is a dramatic departure from earlier in the year when the U.S. Mint was selling well over 4 million a month. Just a little point here. Just Pew Global says 54% of Americans see the economy as poor. They must all be peddling fiction. And the oil fell. They're concerned about a glut. Now, the difference between oil this year and gold this year is oil managed to rise from its low levels in January, even though output continued and the demand for oil did not increase dramatically. So it's only natural that gold has fallen back down from its high of $50 a barrel this year down to about 40, 42. More U.S. economic data. Non-farm productivity down 0.05% when they expected it to go up 0.4%. Not good at all. But of course, Reuters. It's unexpected. It unexpectedly fell in the second quarter, pointing to sustained weakness that could rise, concerned about corporate profits and companies' ability to maintain their recent robust pace of hiring. So even in bad news, they still try to throw in there that, well, you remember there's this job market that's robust, solid, and sturdy, and so on. What I think is happening with the non-farm productivity is it highlights that when you have a part-time, unskilled labor force that's prone to a lot of turnover, that the productivity isn't very good. So when you're running multiple shifts at a company, it requires a lot of management time. You've got workers who come and go as they please. And it also adds to why you have new jobs being created. Someone goes into a job, they get $7, $8 an hour. They don't do very well in it, or they don't like it, so they leave and they go get another job for $6, $7 an hour. Now, that looks like, wow, people are able to leave work voluntarily. That means the labor market's robust. It means it's dynamic. Yeah, at that level, you can. I know many people can go and get a job in the minimum wage or just slightly ahead of minimum wage. And if they don't like it, they can leave and go get another one. But two things happen there. It makes the job numbers look good because there's people getting jobs. It makes it look like it's dynamic because people can leave their job and go get a job. They can voluntarily quit. And it also leads to what I think is this low productivity. Because if people are coming and going at work, they never really get up to speed so that the productivity raises. CNBC, Wall Street bankers don't like. Remember, I don't go through every line on this blog post, so please go to the Smaulgld website. Schmita delayed again, in case you missed it. Week ended August 13th. And there's so many links in here, I don't have the time to go through them. Many of them are very interesting, so it's worth checking it out. And let's get back to where we were. As I mentioned, the follow-up that we did on how the Swiss National Bank built a $1 billion mining share portfolio. If you go to that blog post, you can see what the original, or not the original holdings of the Swiss National Bank, but the original filing that they did in early, reflecting their purchases of early 2013. The Swiss National Bank has been at this since 2013. They probably were at it even before that. They just hadn't met the requirement. I think it's 100 million where they had to file with the SEC. So the Swiss National Bank has been buying equities, have been mining shares at least since 2013 and probably earlier. Asian gold demand. This is just Scotiabank. This isn't me. Says gold demand to fall 15 to 20% on higher prices. That's a projection. They're already down gold demand in Asia, and they mention the problems that they're having in India with the imports and then also the higher prices leading to that. You want to know how much Olympic gold medal is worth? Click on that link. There was an interesting story about the world's oldest gold artifact. I think it was found in the Balkans, and maybe it was Bulgaria, Romania. I think it was Bulgaria. It's a nice picture of that if you want to check that out. Oil, as I mentioned, the Saudi Arabia output hit a record high. So again, just based on supply and demand, if the supply is up and demand is down, you really can't expect the gold rally to continue very much if they're continuing to hit record output. Now, some of the U.S. shale miners have slowed down their production perhaps, but the inventories are still building. So we're not going to see, I don't think, any dramatic increase in the price of oil unless there's some type of shock where you just can't get oil because of supply lines. U.S. Mint sales update, you can check that. Another small addition to the amount of gold and silver coins sold at the U.S. Mint. The platinum coins were, it looks like they're capped now. They sold 19,000 American Platinum Eagles. It doesn't look like they're selling any more of those. And it looks like the 5-ounce America the Beetle Harper's Ferry coin is going to be capped at 34,200. And in a couple of weeks, they'll have the Teddy Roosevelt coin, which they hope, I don't know if they care whether they sell more or fewer of them, but maybe they'll sell more than 34,000. I don't know. The American Gold Buffalo coin is the U.S. Mint's kind of answer to the Perth Mint 24 karat coin, the Canadian Mint Gold Maple Leaf 24 karat coin. They started producing that coin in 2006. It sells okay, but again, this year versus last year, this July, 10,000, the 1-ounce coins, 10,000 ounces were sold. Last year, 32,000 coins were sold. So the physical market, even in this tiny non-indicative market of the American Gold Buffalo, is down, just like the Gold Eagles are down, the Perth Mint is down. All of the gold sales are down on the physical side at the major mints, as are the silver sales. Another story here, gold demand slumps in Middle East at record lows in Egypt and Turkey. So it's not just Asia, this is in the Middle East. And again, higher prices, there's other mitigating, not mitigating, but other exasperating factors. You've got political turmoil and so on, but still, these are the periods of time where you'd expect gold physical demand to be higher in a place where there's turmoil like Egypt and Turkey, but it's not the case. The World Gold Council came out and mentioned the first half of the year there was record investment demand, and for the first time since they've been keeping records, the investment demand, which they basically is ETFs, has been higher than even the jewelry demand. So it was the first time that investment demand was the highest. So this so-called investment demand has pushed prices higher this year, even though there's been a lack of physical buying in China. Not a lack of, but a lower amount of physical buying in China, India, and in the Western physical gold buying. Gold investment demand was up 16%. From the first half of this year to first half of last year. But as we've seen, the physical demand on the Shanghai Gold Exchange, the Indian import data, the Chinese import data, the People's Bank of China, gold reserve additions, and the Perth, Canadian, and U.S. mints are all not at 16% higher than last year. They're actually down, in many cases, substantially. This is for the first time investors were the largest buyers of gold for 2 consecutive quarters. And the media loves to tout this whole ETF because basically when investors buy ETFs and they don't buy the physical, that allows for all types of shenanigans to go on, because then people can have the exposure to the gold price, but they never have to take delivery of gold. They never take delivery of gold. They don't see gold. They view that as a feature, not a flaw. And that's where, if you read most of your mainstream articles, they basically try to steer you away from gold, but if they can't steer you away from it, they tell you to buy an ETF, and that seems to be working. The price goes higher, people pour into ETFs. The smart physical buyers hold off and don't buy the physical. It's too high. Here we go, Schmita delayed. I saw this. This is a chart showing the S&P, NASDAQ, and Dow Jones all hitting all-time highs for the first time simultaneously, I think, since 1999. And we've had some commentators say that, the top is in, the top is in. Oh, I didn't mean the top in the S&P or Dow Jones. I meant the NASDAQ. Well, you can't make that argument anymore. They're all at tops. And the reason is, yes, logically, none of these things should be happening. But these are the same people who call COMEX Crimex, who say everything's manipulated. Well, if you know that, then why would you be calling for something otherwise? Because if COMEX is a crime scene supposedly. Well, then you know they're going to defend it, even if it does, even if they don't have the requisite amounts of gold or silver. If you know that gold and silver are manipulated, why do you call for a price of $2, $3, $5,000 an ounce when you know it can be manipulated? If you know that the stock market is manipulated and you know central banks are buying, why are you calling tops in these markets? It doesn't make any sense, because on the one hand you recognize the issue, you recognize the problem, and then you say, well, it's going to go higher. Why? You've already said the reasons why it shouldn't go higher, why it shouldn't collapse, because there's this manipulation going on. And that is what's happening. There is manipulation. I don't deny it. But I recognize that if there is manipulation, you have to factor that into your projections. You can't then say, well, if it would have gone higher, gold and silver, if there wasn't for manipulation. Yeah, I know that. Or the stock market would have collapsed if the central banks weren't pumping money into it. Yeah, but you know they're pumping money into it. You know that gold and silver manipulate. So I don't understand why you would make projections that deny what you already know. It's just like when they say something was unexpected when a quarter came out because of cold weather. Well, when they made the projection in April for the first 3 months of the year, January, February, March, for what they thought the economy was going to do, they knew what the weather was like. But then when it turns out lower, they say it was unexpected because of the weather. No, the weather wasn't unexpected. The weather already happened and they knew it. Any event, that's my view on making projections. If you know there's an issue with manipulation, then you can't assume it's. You can say, yes, I think the prices would be higher if there wasn't for manipulation. There's nothing wrong with that. But then you make a projection and then it doesn't happen. You say, well, because of manipulation. Well, you knew the manipulation was there. So it doesn't make sense to make projections in the absence of manipulation. And then when it doesn't go higher, you claim, well, because of manipulation. Well, you were aware of that manipulation when you made the projection. So initial claims come out. Reuters, again, U.S. labor market firming. Of course it is. Pointing to sustained labor market strength in early August that could help spur faster economic growth. Okay, so a few people didn't get fired, supposedly. They didn't make initial claims. And that's going to somehow spur faster economic growth. That's Reuters. Then we have San Francisco Fed President Williams. We should raise rates this year. Blah, blah, blah. He says one rate hike is at least one rate hike is appropriate. And we've been hearing this nonsense over and over. And I'm not saying that they won't raise rates. In fact, I think if the conditions are correct, they will sneak one in as soon as they can. But it does not mean that they've changed their policy of a low to no interest rate policy. Just raising rates because you say you would raise rates is not the same thing as embarking on a 3-year gradual tightening plan, because they're not. And I don't know who some people send me an email if you know who this woman is. It looks like someone from, I don't know what it's from, but it's an interesting photo. Gold and Chinese jewelry demand. India and Chinese gold jewelry demand on higher prices. That came from friends at Bloomberg. Now here you go. Retail sales flat. You have these robust job numbers. You think the people go out, they get these jobs, they start spending. No, the sales are flat. Retail sales excluding autos down 0.3% because there's no money to be borrowed. When you have to spend your own money, they're even lower. With autos, at least you can go and get credit to go buy a car. The PPI, now this is what the Fed loves. They love the whole inflation scene. According to their own numbers, the producer price index fell. So the Fed is not happy. Now Reuters takes these two pieces of data, which are horrendous for the Fed. If you're going by the Fed and you're listening to them and taking them at face value, these two numbers would tell you there's no way they would raise rates. Reuters says this could temper expectations of an acceleration in economic growth in the third quarter. Whose expectations? Reuters' expectations? Who is expecting an acceleration in economic growth in the third quarter? But then it says they suggest the Federal Reserve will probably not raise interest rates anytime soon, despite a robust labor market. So they always got to throw in, they always got to remind you that somehow there's this robust and solid labor market. And, maybe, just maybe, that's going to spur economic growth. But they did have to recognize that the retail sales and the PPI were not indicators of future economic growth. Now, this is what's interesting. And again, this highlights why the markets are rigged. So gold on Friday, see right here on 8:30, the number comes out that the PPI is negative and that the retail sales are flat. And what does gold do? It soars, as it should. Why? Because the gold algos trade on the fact that if the Fed isn't going to raise interest rates, that's good for gold. And of course, it falls back, it goes, and then all of a sudden, bam, it goes down. No reason whatsoever. Someone dumps 22,000 contracts, profit taking, all at once to get the best price, and down it goes. Silver, same thing. Numbers come out, boom, it goes up. No, well then, bam, it goes right back down. Now, there's no other explanation for that, and you can make up explanations for it, but this is what I'm talking about. You know this can happen. You know that this can be done. There's a rogue trader. You don't even have to know who it is, who they're attached to. We've seen this before. These types of raids where they just drop the price by dumping endless amounts of contracts onto the market at once. It basically killed the entire rally going into the weekend. But gold should be 10,000. Yeah, maybe it should be. But it's not going to be when they can do this kind of thing here. And it looks like, if you look at both of these charts, you see a nice rally and then boom, finished. Now, there was a reason for the nice rally. Very bad numbers, very positive for gold, but no reason for these two drops here that you see. And that was Friday. Let's see if there's anything else here. Clinton's released their tax returns, indicated they made $10.7 million in 2015, which was down from like 20 some odd million they made the year before. I guess Hillary's on the campaign trail. She can't charge for those speeches. So their speech revenue is down. It's their only revenue, I think. They have made about $250 million over the last 10 years giving speeches. Now, I wouldn't say they're the two most dynamic speeches, so there must be some reason why people are willing to pay them up to $750,000 per speech. But the interesting point that people didn't make a big deal out of was, of the 10.7 million that they made, they donated back 10% of that revenue to the Clinton Foundation. So the media, the reports I read on it was, this is pressuring Trump to release his returns, when it should be saying, wait a minute. First of all, how do they make $10-20 million a year giving speeches, and what's in those speeches that's worth that much? But second of all, then they can donate the money back into a foundation that has their own name on it, and then that foundation only contributes 10% of the proceeds that it gets to charity. That's a story to me. I don't have a horse in the race. I'm not for any of these politicians, but when you see that and the way they spin it as somehow this is the Clintons being transparent, and where's Donald Trump's tax returns? It leaves a bad taste in my mouth. SDRs. There was the first SDR yuan bond issued by the World Bank. It was announced on Friday. Rory Hall over at the Daily Coin did a nice summary called SDRs and De-Dollarization. You can check that out over at the Daily Coin or click on this link. He also did I haven't listened to it yet, but he also did a podcast with somebody who seems to be knowledgeable on the SDRs. I have an article, What are SDRs? If you don't know what I'm talking about, I'm not going to go through it now. You can click on there. It gives you a short summary of what they are, who has them. U.S. Mint sales update. As we mentioned, we already covered this. They are low for the year, low for the month, 325,000 halfway through the month of American Silver Eagles, and 26,000 American Gold Eagles. Thank you again for tuning in, listening. Please subscribe to Smaulgld.com. Go to the website. As I mentioned, that's where most of the information is. It's not here on YouTube, but please go ahead and also subscribe to the YouTube channel. We'll talk to you soon.